welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And Cheryl, what a start to the brand new week, and see the comeback that the bulls are making onto the market. Seems like there's no stopping since the start of the day.
Absolutely, Shrishti. A very good morning to you. It's been a great morning for our markets. Remember that we started the June series on a very firm footing on Friday, and that journey continues even today. If you see, Nifty has surpassed the 18,600 mark. Nifty Bank, fresh record high levels in today's trading session coming in for Nifty Bank. And Sensex also holding on to good strength in today's trading session. If you look at the broader markets, they are also moving almost in tandem with the benchmark indices. But let's take a look and take a deeper dive into what exactly is moving in the markets. If you look at the top Nifty gainer, that is Mahindra & Mahindra. Remember, it is reacting to earnings. A lot of brokerages are betting big on this particular counter. So here, Mahindra & Mahindra holding the fort, 3.3% uptick coming in for that particular counter. We had also spoken to the management of Mahindra Group. We had Anisha on ET Now earlier on, and who also basically echoed the similar sentiment that the company is focused on growth going ahead, and the company is firing on all cylinders is what Anisha spoke to us and told us in that exclusive interview. But apart from that, you have Hindalco, IndusInd Bank, HDFC, ITC, all of them seeing good strength. Add to that list, even SBI Life and HDFC Bank are actually moving quite well. ONGC reacting to those numbers, 3% downtick coming in for ONGC. Sun Pharma reacting to those numbers, as well as the announcement that they are going to look to buy 100% stake in Taro. Remember, Taro is an arm of Sun Pharma, and they're looking to up the stake, take over the entire company. So Sun Pharma, however, is subdued in today's trading session, 1.5% downtick coming in for Sun Pharma. DVs, Maruti Suzuki, HCL Tech are the some of the other losers in trade today. Talking about the sectoral indices, so you have the defensives that are playing spoil sport. You have pharma index that's down about 0.4%. You have Nifty IT right now trying to actually break past that positive territory, but it's not happening. Day's lowest point coming in for IT index. But talking about the other sectoral indices, metal is holding on to good gains. So is FMCG index. So that's the context, and that's how the markets are looking like today, Shrishti.
Okay, so the bulls making a comeback, and what a rally that we are seeing onto the markets. But let's move on, and here's the big voice from the markets. And we today had Chris Wood, and he remains bullish on the India story as he sees several opportunities across the sectors, and he believes that the Sensex could surpass that 1 lakh mark in the next 5 years. Let's listen into his take onto the Indian markets.
You track Sensex more than Nifty, and you know we've discussed this over several engagements and separate interviews. What to your mind is not the probability but the possibility of the Sensex touching 1 lakh in the next 5 years?
1 lakh is
100,000.
Well, I think there's a huge likelihood that yeah.
I want to hear that loudly.
It's very
you
likely.
Say that there's a
no. That to me is very reasonable. Yeah, very easy to see.
So Chris Wood is of the view that in the next 5 years, the Sensex...
let's put it like this. I would be disappointed if the Sensex had not touched 100,000 5 years from now. Okay,
so I'm going to capture and recapture this headline again. You will be disappointed if the Sensex in the next 5 years does not hit 100,000.
Yeah, absolutely.
It can go above 100,000 also.
Well, clearly, yeah.
All right, that's a bullish take coming in from Chris Wood, saying that he will be disappointed if Sensex doesn't cross the 1 lakh mark in the next 5 years. But he's also saying the banks will continue to be a consensus call. He sees massive opportunity in the Indian real estate space as well. What else does he feel about the financials and the realty space? Listen in.
There is a consensus view on owning banks. But I'm going to still own the banks. I've been running my Age Direct Japan long only greed and fear portfolio since 2002. So I would say in the more than 20 years that portfolio has existed, if there's one sector where there's always been an allocation in an Asian context, let alone an Indian context, it's Indian private sector banks. So to me that story remains intact. That's the most straightforward story in India. So if there's a global investor who wants to invest in India and hasn't got the bandwidth to invest in lots of stocks, that's probably where they're going to invest. But right now, with the monetary tightening cycle over, the obvious place to add to, at least I think it's over, the obvious place to add to exposure is property stocks. So the property stocks went vertical in 2021, sorry, in 2022.
22, yes.
When we got second half of 22, they went vertical because suddenly the market realized the property upturn was finally happening after a 7-year downturn. Last year they corrected because we're in a monetary tightening cycle, but actually the property market kept the actual physical property market kept recovering. So the moment we get hint of easing, the property market stocks will do very well.
So can I say,
The property
Chris,
stocks will do well.
yeah, so can I say that Chris Wood is in fact urging our viewers that don't buy real estate, but buy real estate stocks in India?
Well, right now that's the safer trade, but I think they'll both be going up. The other point about real estate is because you had this dramatic, when I say dramatic in its impact, Real Estate Regulation Act, which has caused this dramatic consolidation amongst developers, which means there's a fundamental lack of supply because it's much harder to develop property now from a developer standpoint because you've got to have the balance sheet to keep 70% of the pre-sale cash flow in escrow, which means that the supply is going to be lagging the demand. So I think it's a very straightforward story.
So Chris, your portfolio is in public domain. So I'm going to just read off the names what Chris Wood's model portfolio currently has. It has Godrej Properties, real estate company, GLF, India's biggest real estate company, Macro Developer, India's biggest residential real estate company, and I think there is Century Textiles there, which is also real estate play.
Real estate related play.
Yeah. So you pretty much like 4 real estate stocks, even though the weightage of real estate in the Nifty is very low. You are not overweight, but you are double overweight on real estate.
Yeah, but in my Asian portfolio, I added to the real estate stocks last week.
So when you tell your clients about buying into real estate stocks, do you get a pushback or are they open to the idea?
No, I think the domestic institutions here have always had a prejudice against property sector.
Okay, so those are the words coming in from Chris Wood of Jefferies, where 1 lakh target is what he has set for the Sensex in the next 5 years and continues to stay bullish on the realty as well as the Indian financial space. But let's move forward and try to understand the market picture that our experts onto the show are looking at. And we have Ashish Maheshwari as well as Hemen Kapadia joining us right now. Very good morning and thank you so much for joining us today on ET Now. Hemen, firstly, let me come to you. What are the levels that you are tracking out for Nifty as well as Bank Nifty? It's a record high for Bank Nifty, no stopping since the start. And on Nifty 50, not very far from the all-time high levels. So this particular expiry, do you believe that those are the levels that we should be watching out for?
A very good morning to you, Srishti. Thank you for having me on the show. Absolutely. I think you hit the nail on the head. You have the Nifty overcoming. Okay, we were in a tight range, not tight, but we were in a range between roughly 18,000 and 18,450. We've overcome that. The next level was 18,600, and now we seem to be taking that out. I'm saying seem to be because it's the first day of the week and we need to close above this. And we are within striking distance of its all-time high. So frankly speaking, yes, I think that in terms of support, now 18,600, 18,442, 18,300 will be support. Resistance 18,729 and the all-time high of 18,888. Correspondingly, and just one more point, Srishti, there's a bullish gap today. Markets have a tendency of trying to cover the gap out of 10 times, 8 times. If they don't get covered, that's good. But that is a possibility probably on Wednesday and Thursday. As far as the Bank Nifty is concerned, 44,152 was the all-time high posted on 14th December 2022, Srishti. We tested that twice in the last, in the current month, and now we've taken that out. We are at an all-time high. So frankly speaking, clear blue skies, no known resistance levels. Outlook remains positive. Further upside seems like a distinct possibility. Is it going to continue with the same speed? I'm not sure, but a further upside, yes. No levels upside as far as the Bank Nifty is concerned. A possible target right now seems a bit presumptuous, 49,400. Support comes in at 44,152, 43,853, 43,600.
ambitious target that you've set actually for the bank in Nifty. 49,000 upwards is the target they're setting. Though you're saying that there is more steam, you cannot actually pinpoint what sort of a target you can eye out on for Nifty Bank. A very good morning to you, Hemen. Very good morning to you as well, Ashish. And coming to you, you had Chris Wood that gave the very big bullish target of 1 lakh in the next 5 years. He said he'll be disappointed if the Sensex doesn't cross that level. But for that level to be reached, that is the 1 lakh on the Sensex, I believe it's doable. Definitely looking at the way how Indian markets, everything seems to be in tandem for working well for the Indian markets. But which sectors do you think will be the key drivers going ahead for the markets to take that next leg of growth?
Numbers given by Chris Wood. In my view, these kind of numbers are quite achievable, and even we can achieve those numbers faster than that. Again, we have seen a very good amount of interest in Indian equities from even FII side. Even if you see last 3 months, continuously there is buying from FIIs. We see March, April, and May, 15,000, 16,000, so far 31,000 crore worth of equities only are already bought. So this kind of momentum will gain more traction in my view, once FIIs are there, and they are the major player into large cap stock per se. So in my view, Bank Nifty, you are going to see even new highs in coming series itself, and Nifty will also do well. And the sectors which are in radar, which can fuel this kind of growth, are more domestic economy-led section. So I am very bullish as far as automobiles are concerned, because we are 140 crore Indians, and the mobility is one key challenge everywhere. So auto companies are going to do well. We have seen stocks like TVS Motors with 60,000 crore kind of market cap, and still FIs are increasing their stake every month in this particular company. So automobile will be my pick number 1 here. Now, my second sector which I like is again real estate. In my view, as housing for all is priority of government, and the way income levels are going up, this is going to be another beneficiary. So real estate and allied sector like tile, paints, etc. will continue to do well. And the third sector, in my view, which will again do well is FMCG, because FMCG is again a more inward looking sector, and the kind of good growth we have seen in FMCG in last quarter, numbers were pretty good, and this is the reason FMCG index is at almost at all-time high and will continue to thrive. So these three sectors are in our radar, which can take us to even 1 lakh magic figure.
So those are the sectors that Ashish has actually outlined. Basically, most of them should be domestic focused sector that he likes. So it's auto, realty, as well as the FMCG space. So these are the sectors that one should look out for, Srishti.
Well, yes, absolutely. But with this, let's move on and focus on some of the big news flows. And General Atlantic and Advent International are at an advanced stage in their bid to acquire Everstone's capital stake in restaurant brand Asia, which operates fast food chain that is Burger King in India. Let's get in more details on this. And my colleague Ratna Bhushan from Economic Times is joining us to give us more details on this one. Take it away, Ratna.
Thank you. Remember that Burger King IPO listing at a 90% premium over its issue price. That was back in December 2020. In fact, its IPO was subscribed 156 times. So this has been a great investment for Everstone, and now that it is looking to sell off its entire stake in Restaurant Brands Asia, it is obviously looking to sell at a good price.
Yes, absolutely, Ratna. So that's the details coming in on Restaurant Brands Asia, and as Ratna has outlined, that it's been a great investment for Everstone Capital, and that Everstone Capital now is in talks to sell their stake in General Atlantic, and Advent International are at an advanced stage in their bid to acquire Everstone Capital's stake in Restaurant Brands Asia, which operates Burger King in India. Thank you so much for that, Ratna, for getting us all of those details. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking all of your queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now show, where we get you answers for all of your stock-related queries. Remember, viewers, we are live on Facebook, and you can write to us on the WhatsApp number that's flashing on the top of your screen. Do remember to mention your name, the stock that you're looking to invest in, and if you've already invested in it, then do mention the buy price as well as the quantity that you're holding and the time horizon. That will help our experts help you better. In case you miss your queries, so don't worry, we will be you can find the entire show on the YouTube feed right after the show ends, shortly after the show ends. But for now, let me start taking all of your stock related queries, and this one is coming from Pradeep. He's writing to us from Kolkata, and he is a recent investor, he's saying, but he has a long-term vision of about 2 years. He's already purchased 10 shares of Amber Enterprises at a price of 2,030 rupees per share and 20 shares of Muthoot Finance at the price of around 1,045 rupees per share. He wants to know whether he should hold or book profits or add some more of these counters in his portfolio. What's your take on this, Ashish? What should his strategy be with Amber Enterprises as well as Muthoot Finance?
Yeah, I think both are good stock as such. We have seen excellent number from Amber Enterprises in last quarter. We see December to March quarter net profit went up by almost 6 times in Amber Enterprises. And stock, we see it used to be 2,600, 700 mark. And from there, we saw a lot of correction because of some slowdown in the white goods market. But now again, things are picking up. So we have seen Dixion, PG, Electroplast, Amber, all these stocks are again inching up. So my suggestion will be to remain invested in Amber Enterprises. My target for this stock in this year is 2,500 plus. As far as Muthoot Finance is concerned, again, as FIs are back in big way into BFSI segment, and Muthoot is again used to be their favorite stock in 2021. Also, we have seen very good buying from them. So I'm expecting further upside in Muthoot Finance is also possible. Very good set of numbers also in this quarter. This will keep momentum higher. So another 100 rupees upside in Muthoot Finance can't be ruled out even in next 3 months.
Okay, moving on to the next question, and this question is from Hemen, and he's looking out for Kunal, but yes, Kunal is not there, but we have Hemen Kapadia with us, and Hemen, he's spotting a golden crossover in 2 counters. Firstly is Prestige Estates and the other one is Dhanuka Agrotech. Since this is a bullish indicator, what kind of a move is expected in the short to medium term, and any targets to keep in mind for both of these names?
Prestige has nowhere, in the sense we made a high of around 507 in September 21, and we are now almost in June, ending of May. So what, 21, 22, 23? So we spent almost 2.5 years, 2 years doing nothing. But this seems to be a consolidation phase, a correction phase, a corrective phase. The range is between 380 on the downside and 525 on the upside. We've never sustained above 525 or given, for that matter, even a close above 520 in the weekly chart in the listed history. So this needs to get overcome. We need a weekly closing above 520. That happens. A minimum 15% upside in the next 6 months seems like a very distinct possibility. I would be more bullish than bearish, but after 2 years, I'm not sure how much more time it is going to take to get this breakout done. But once again, I would be more bullish than bearish. Downside supports 470, 440. The second stock is Dhanuka. Dhanuka seems more of a rounding bottom sort of a scenario, a turnaround case. Support at 600. So target would be 800 and more. This looks nice. Worst almost seems to be over. A technical turnaround is around the corner.
All right, this next one that I have is coming from Bala. He's writing to us from Chennai. Ashish, he wants to know among the auto ancillary space, does LG Brothers as well as Steel Strips stand out? Because he's wondering that if he should look to invest in these counters. If not, then which other stocks in auto anc space looks good to you?
Yeah, in fact, LG Balakrishnan has is a good pick. Almost companies debt free and continuously. We have seen a lot of buying interest here. There's just at a near striking distance of 52-week high also. Though some consolidation is happening in the stock, but in my view, this is again good stock to look at. Another stock which I like in this segment is Motherson Sumi. In my view, a very good set of numbers came out from Motherson in this quarter, and though stock is consolidating here for some time, but again we are going to see some good run up coming in Motherson Sumi, Samardhan Motherson, and which can take a stock to 90 odd levels. So LG Balakrishnan and Samardhan Motherson are my two picks in this segment, which will do well.
Okay, moving on to the next question. And Ashish Veni is a senior citizen and wishes to buy two counters at this point in time. And what's your outlook on both of these going ahead? First name is Zomato and the other one is NCC. So any price that she should look at to enter in any of these names?
See, fundamentally, I can say both are now looking good. NCC is again looking promising after the correction from 120, 527. The stock came down to 100, 45, then again started the upward journey. And the way these larger players in infrastructure sector are getting order, I think this will do well. And I'm having a target of around 140 to 115 this year in NCC. As far as Zomato is concerned, everybody is waiting for their turnaround story. Though they are becoming now EBITDA positive, and once Blinkit also become EBITDA positive, then we are going to see even further upside here. Though Zomato will be slow and steady, but looking at so many brokerages now giving target of 80, 90, and plus. I think this will be also should be kept under radar. Can be bought in any decline at 60 to 63 levels. Zomato.
Okay, this one is coming from Anant. Anant Naik. He's writing to us from Bangalore. This one is for you, Hemen. He has 50 shares of KPIT. He wants your advice as to whether he should retain, as it is targeted to reach about, his target was about 1,000 rupees per share, and the stock has indeed crossed those levels, is at 1,002 rupees per share. So he wants to know whether he should sell or hold. He's not in a hurry for funds. So what should his strategy be? Stay put with KPIT, more upside possible? That's what the chart's indicating by any chance, Hemen?
Absolutely, Cheryl. I think that hold on. Charts do indicate further upside. I'd say keep a protect profit at around 950. We're at all-time highs. Just a couple of days back, we posted a fresh all-time high in Cheryl. So, firstly, no known resistance levels. Secondly, daily chart, weekly chart, monthly chart, whatever time frame you see, we are in a clear, established, structured uptrend. Nothing to worry. Once again, protect profit at 950, can go to 1210 or so. That's my target.
Moving on, and Ashit, the next question is from Dasaradi from Vijayawada, and he wishes to buy 500 shares of Hindustan Oil Exploration as well as Ugar Sugars. These are the two counters that he's looking at for the next 1 year. And what's your advice in both of these? Any target price to keep in mind, and what's the outlook?
Yeah, HVC came out with very good set of numbers in this quarter, almost 106 crore profit, which was, I think, 35, 36 was there in December quarter. So this is a stock I think can be purchased in some decline because some profit taking is happening post their result announcement. So this I think should be purchased at around 175 odd levels. As far as Ugar Sugar is concerned, I'm not that big fan of any sugar stock because there's a sector which has grossly underperformed entire market, and mostly retail investors have struck here. So instead of Ugar Sugar, I'll suggest you go for Praj Industries, which is making ethanol plant for sugar companies, and the stock is showing a lot of buying interest from institutional investors after their quarterly numbers. So Praj is better bet in this particular sector than any individual sugar story.
Right, this one is coming from Puneet. He's from New Delhi and he wants to know about Shyam Metallics. He's bought it at about 310 rupees per share. For the very short term, he wants me me to ask this query to you, Ashish, but given the fact that he's mentioned the word short term, I'll take it to Hemen. What's your take on Shyam Metallics? 310 is the buy price. Currently, the stock is around 305 rupees per share.
6 weeks of a sideways movement here, but I would term this as a consolidation because the run-up before this consolidation has been bullish. Close about 315 should take it to 335 hold. It's a matter of time before it breaks out, but yeah, it could take a couple of weeks, but I would be clearly bullish on the stock.
Okay, so bullish on Shyam Metallics, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back. But
welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of his stock-related queries. And this next one is coming from Prasad. He's writing to us from Hyderabad. And he wants to know if he can take position in Bajaj Finserv at the current level for investment purpose, and his time horizon is 3 years. Ashish, do you think now is the right time to invest in Bajaj Finserv if you're taking a longer-term outlook on this one?
See, I think Bajaj Finance and Bajaj Finserv have lost that sheen, which was earlier in a couple of years back. And this is the reason because a lot of FIs who were very bullish on these counters, they have sold these stocks. But now, again, as we are witnessing, FIs are back in the market and looking forward to buy such stocks. So I think these stocks will be again in demand. So both the stock Bajaj Finance and Bajaj Finserv hold merit. Valuations are also reasonable compared to what it used to be a couple of years back. So I recommend to add position in both Bajaj Finserv and Bajaj Finance, and even you can do half of both positions in these counters. They will do well in this year.
bullish on Bajaj Twins. But Ashish, once again coming to you, the next question is from Satya Veni, and he's a long-term investor and wants to invest in two counters, Expelio Solutions as well as GMM Pfaudler. Any price that he can look forward to for entering in any of these counters? What's your outlook?
In fact, both stocks are good. Explio is again a company which I have recommended and this show earlier also, and his stock is very steady because they are the kind of order book they are having and the kind of consistent profitability is there. Explio will continue to do well. Same GMM Pfaudler is again a stock part of MNC company and doing very well business wise. So both these stocks, I think, gradually you can start accumulating even now also.
Okay, this one is coming from Venkat Rao. He's writing to us from Visakhapatnam. He's a long-term investor, watches the show very regularly. He wants to know whether he should invest in BHEL and BEL right now, Hemen, or if not right now, then at what level should he look to invest in these counters?
Well, Cheryl, I think I'm not sure if one can catch the top and bottom. So I suppose he can spread out his investment. Markets are volatile, all markets are volatile. So he'd get opportunity. That's what I mean to say. BHEL from a longer term point of view looks promising. So we are at currently 81.70. A few levels at which I think he can invest. 80, 75 and 66.50. 3 levels where he can invest in bits and pieces. The second stock he mentioned is BEL. Has not much to go on because we are very close to its all-time highs as far as BEL is concerned. But nevertheless, the first support comes in at 109, second at 104, and the third at 96. So 3 levels he can use to invest at in BEL: 109, 104, 96.
Wanted to know your outlook on two counters. The question is from Bisaka and he's holding 2 shares. Firstly is Nifty's top gainer today, that is M&M. He's holding 30 shares. He didn't share his buy price, but assuming that he must be in profits with the gains that we are seeing today, is this a good time to book profits in this one, or should he continue to hold on? And the other counter he has is 30 shares of Canfin Homes from a price of 543. So any targets for this one?
Closer to this level. So 1360, we posted a high of 1350. 10 rupees at this level isn't much. So this is where he can book some profits. We've sustained very rarely above 1360, so you can book profit over there. We've had a run up and we should cool off a bit. And the second stock you mentioned, Shishnik.
Canfin Homes, he's holding the shares from a price of 653.
Yeah, thanks. Canfin Homes, medium-term uptrend looks positive. Firstly, 670 support needs to hold. We've broken above that. Last time we closed above 670, Shishti was in the week ended 14th October 21. So almost 1.5 years have passed, and now we are overcoming this level. So that is a positive. 670 needs to hold. Resistance level is 720, which is also the all-time high. So this move has been on from 510. So I suspect somewhere closer to the all-time high is where we'll see significant resistance to warrant a breather. If and when we take out 720, we're going to 850. So from a longer term point of view, it seems fine. Medium term point of view, fine. 670 needs to hold. 720 is going to be a headache of sorts.
Okay, this one is coming in from Meena Matthew, writing to us from all the way Saudi Arabia, and wants to know about VATech Wabag, 100 shares at a price of 395 rupees per share. Ashish is willing to hold for the next 2 years, but wants to know whether she should or she can expect high returns from VATech Wabag in the span of 2 years, or should she look to exit right now and enter at a lower rate?
Need to hurry and exit from this stock. In fact, to any new investor looking to enter in this stock, though stock is at 52-week high, I strongly recommend this stock to buy, because the kind of order book, almost 13,000 crore worth of order book is in hand. And this is not only in India, this is a global company now. And we like in last management commentary, what they have said, 6,800 crore worth of new orders came in the last quarter alone. So you can just imagine kind of traction is there in the water management related activity, where they are one of the leader in market. So my target for this stock will be 600 in this year. So any new investor want to enter, even buy now.
That's the view on VATech Wabag. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of our stock-related queries. The next one that I have is coming in from KVS Money, writing to us from Bengaluru. Wants to know, what's the prospect for delivery? Is holding about 100 shares at a price of around 487 rupees per share. He's saying the stock has moved lower from those elevated levels that he's purchased. Wants to know whether it makes sense to stay put with this one or look to exit. Ashish, what's your take on delivery, and which sort of direction will this particular counter take? Ashish, you will need to unmute.
Okay, I'm sorry. As far as delivery is concerned, quarter over quarter, we have seen the companies just reporting losses from 165 this quarter, 117 crore. And the way competition is picking up in this e-com delivery business, I think delivery will be under more pressure going forward also. So my suggestion will be to exit from this stock. Instead of this, I recommend you can enter into Zen Technologies, which is into defense sector, doing very well. And I'm expecting very big orders coming in this company, even in the next couple of months. So Zen Technology can give you much better return than delivery.
Okay, Ashish, once again coming to you. Satya has shared a bit of a long list where he is facing a loss of over 20%. Stocks like ABFRL, Goldium International, Heikel, PEL, as well as Polyplex. So all of these counters are at loss. So any name that you feel that that actually he should exit at this point in time, and he's also looking to add Atul Auto as a bet in order to recover the losses. So will that be a good move?
In my view, whatever the stocks you are holding, you can exit once, though 20% portfolio loss is there. But I'll suggest a new portfolio. Even Atul Auto, I'll not recommend to buy at 350 level, because we have seen some amount of correction in all those EV related stocks is concerned. So my new 5 stocks for your portfolio, which can give you 20% kind of upside in next 1 year. My number 1 pick is going to be Som Distilleries, which you can buy at 220 part of my FMCG basket. Another stock from auto, if you want to add, I still strongly recommend TVS Motor at 1300 for a target of 1500 in this year. Third stock is going to be Vartech Wabag, which we have discussed, which can surely give you 20% kind of upside even from here. Fourth is again Zen Technologies for 20% upside. And fifth is Welspun Corp, where numbers are going to come tomorrow and can surprise in this quarter. So these 5 stocks, I think, can be added by exiting whatever stocks you are holding in the portfolio.
Okay, this one is coming from Alma D'Souza, and Alma wants to know about GSFC. The buy price is 140 rupees per share. Is there scope for more upside on this particular counter by any chance, Hemen? Because at one point in time it did touch 180 rupees per share. What should Alma do with this particular holding right now? She is making a small bit of profit as well.
Well, I think tell her to hold on. I think she's got a 10 rupee dividend also. Thing is, the stock moved from 122 to 180 in 7 trading sessions. I mean, the laws of gravity need to be respected. So we've seen a time price correction. We term it retracement. I don't think there's too much of a downside. The bigger picture still remains positive. 150 and below is very strong support. There's a congestion area which I think would hold. She can expect a target of roughly 190 in the next 6 months or so, Sherry.
Hemen, what's the outlook on ITC? Once again, life high levels for this one. Sam from Goa is holding the shares from a price of 428 rupees. Wants to know, is there more upside left for this particular counter, and any stop loss that you would like to suggest?
Well, it did nothing for 3 years between 2018 and 2021, and now we're seeing it play catch up. No known resistance levels, like you said, lifetime high 60. So no levels that I can see. But in terms of a stop loss, I'd say keep a closing stop loss of 430. With projection levels, I can see the stock going to 520 and more, but this is going to take time. We are in a very clear long-term uptrend. So I'd suggest, yes, there is upside. Seeing the quantum of the rise, there would be corrections from time to time, but the bigger picture still remains unequivocally bullish.
Okay, this one is coming from Michael, writing to us from Dubai. He's given a whole host of stocks, but he wants both of your perspective. So I'll pick just one stock in this particular portfolio so that I can get both of the views from both of our experts, and that's Tattva Chintan. He wants to know what's the right price based on technicals to enter this particular counter for the longer term, and indeed, does this stock merit to be in the long-term portfolio? Hemen, you go first. At what levels can Michael look to invest in Tattva Chintan, and then Ashish, you can give your take on whether this stock fundamentally stands out.
Too much of data to go on. Ideally would have preferred few longer the time the better, but with whatever data we have, 1600 is a level which has held. There's a range between 1600 1850 over the last 7 weeks or so. If 1600 cracks in closing, problem. So current levels is not a bad idea to invest if the investor looks like wants to invest. I believe on at least on the weekly chart. Once again, long term, I don't have enough data. Weekly chart, I believe the worst is over. We are forming a base formation. This would get confirmed on a weekly close over 1850, but whatever price action that I've seen up till now on the weekly chart with whatever data we have, seems that the stock is set for a technical turnaround.
Okay, Hemen, the next question is from MVS Rao, and he's writing to us from London, and he's looking to buy Hindalco at the current market price. So will that be a good move, and going ahead with buying Hindalco at this point in time, and any target price for the same?
I think from a slightly shorter term point of view, Hindalco looks okay. I'm not very gung-ho on metal stocks. I have a mixed view. Internationally, copper has gone down. Hindalco is in a corrective bounce the way I see it. So short to medium term, I'd say we have an upside till 446. Beyond that, I'm not very sure. The bigger picture does seem a bit wobbly.
All right, and with that, actually, let's kick start with the rapid fire then. And this one is coming from Padma for Sikandarabad. Wants to know about SBI, 500 shares at a price of 505 rupees per share. Wants to know, makes sense to go ahead and book profit at current levels, or what should be her strategy, Hemen?
Gold with stop loss of 590.
Ashish, the next question is from Krish, and he's holding 100 shares of Phoenix Mills from price of 1371. Can he continue holding this for the next 3 years?
Yes, looking at the retail revolution which is happening and one of the strongest play in that segment, Phoenix Mill, you can continue to remain invested.
Okay, Ramesh from Coimbatore wants to know what's the outlook for Gland Pharma going ahead. What is the better entry price? Hemen, do you think that this one is a stock one should venture in right now?
I'd wait for stability to come in. If he's brave enough to go now, 860 stop loss, I'd wait a bit.
Okay, Hemen, Siddharth from Bangalore wants the technical view on IIFL Finance. He's holding the shares at a lower price. So, what are the levels that he should be looking out?
Okay, the first support level comes in at 432.410. Next, beyond that is 380, has gone over, stagnated. Last 6 months, it's sort of correcting. So, frankly speaking, no directional bias. It's meandering sideways.
Okay, Sirma SGS at the price of 362 rupees per share wants to know what to do with this counter. The viewer has not put his name in this one. Ashish, what's your take on Sirma SGS?
Yeah, I think you can continue to remain invested. Good set of numbers we saw in the last quarter. I'm expecting price of 400, then you can exit at those levels maybe in next one quarter.
Okay, Ashish, what's your outlook on Hitachi Energy? Thomas George from Kochi is holding 100 shares from a price of 1805 rupees. Should he book profit or hold on? His investment horizon is for the next 2 to 3 years.
Yeah, continue to remain invested. The stock is already near 50 to peak high, but looking at momentum in capital good space, this will do well. So my target for next 3 months is 4,100.
All right, and with that, we actually come to the end of the rapid fire as well as the queries. Thank you so much, Hemen, as well as Ashish, for joining us on the show, giving your take on the markets, as well as resolving viewer queries. And viewers, with that, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next.